Japanese candlestick, just the name Japanese, is originated by by the Japanese. Before now, a lot of people were using line. There are different type of charts. There's a line chart, there's a bar chart, but the best so far, so good is still the candlestick, because that's what a lot of traders use. Because there's a whole lot of data, there's a whole lot of information which the candlestick represents. The candlestick give you that every other line does not give it to you. Now let me show you other various ones that are. You can see line. This is a line. This is candlestick rather. This is bar. This is bar. You can see. Let me zoom in so you see the candlesticks. You see the bar chart. You see, it only tell you this. It also telling the opening price and the closing price, but the information is not so clear. This is line. Line will just give you in form of line. There's not much information. You will not know what's going on. But with this, with candlestick, you know the information. There's a whole lot of details in information. There's a whole lot of detail in this candlestick slide. What this week? This is a week. Let me go back to the slide. Okay. Where my pen to? This is a week where price actually got to before. It's a week. Wick, W-I-C-K, or you can also call it shadow. Some call it shadow. Okay, this is a week. This is also a week. All these things, they are weak. They are weak. Where price once got to and it's melted. That's what a week means. Price got here. That is price. This candle was once red. It came here before, but the buyers came. They pushed it up. It went up, and went up full green. Came up this far. The seller also pushed it up. Then it now closed here, and that candle now open again. That's what this thing is telling you. See, there's a whole lot of information. Whereas the line will just give you like this. It will not tell you what has been happening within that hour before the candle close. So that's why candlestick, Japanese candlestick, is regarded as the best form of type of chart in doing analysis. Okay, the Japanese was origin. I have the history too in that book. You can read that. But let me just tell you how what it comprises and how to use it. Now, this is the high. Why we have the high is the high of the week is where the price once gets to before it start coming down. That is, the buyers once push the price to this highest point. So hence it is termed the high. But however, where the body does not include here to this place is called wick or shadow. Where this is where price open. This is where the candle open. Since it's a bullish candle, this is where it open. It's open. This thing that is this one here was not there before. It wasn't there before. It was when price was moving within that hour, price came down to this point and it was not chased up. That's when it now left, just like your normal candle. Now think of your candle, your normal white candle, as if you take a knife. You're not burning it. You take a knife to take off the wax, that white part. You wax it off. Then there's a thread that is there. So that thread is telling you that this candle was once as long as this, but right now the owner took off the wax. So that wax, that thread that is there is standing as a shadow, telling you that, okay, this candle was once as long as this. Same thing as here. It's just like your normal candlesticks too. You can just envisage it that way. That's what this thing is. So this candle was once long to this point, but it was waxed off by sellers. Sellers push it down. Then this hour, let's say this candlestick is 1 hour. That simply means it took 1 hour for this candle to open here, come down, go up, come down here, and close. So hence, the definition of a bullish candle is not by its color, but though we color code it as if it's blue. If it's a bullish candle, we say it's green. We represent it in form of green. If it is a bearish candle, we represent it in form of red. Because a lot of platforms, just as you can see on our MetaTrader, you can change anything. This color, you can change it to pink. If you're a lady, you want to change it to pink, you can change it to pink. You can change it to blue. You can change it to any color you want. So do not, if you ask what is a bullish candle, do not define in terms of color. Don't say bullish candle are green, bearish candle are red. No, you'll be very wrong because I can change the color. So the right definition is the only difference is the bullish candle opens below and closes at the top. That is, the opening price is lower while the closing price is higher. Whereas the bearish price, the opening price is at the top, whereas the closing price is down. Just like it's normal. If something is dropping, it's coming from up and it's dropping. While something is rising, it's coming from down and it's going up. So that is bullish and bearish candlestick for you. That's how to know them. This is a candlestick. Okay, and we have the wick. This one is elongated out. That's as you are seeing here. We have the wick for the down and the top. We have 2 weeks. What this simply means is, at the time, the candle was once this as full as they got to this high, okay? But the bearish force, they pushed it down. Now, this one that I'm using red, that simply means it's a bullish. It's a bearish. I want to be color sensitive now, so you don't get it mixed up. So this is the high, the tip where it got to. This is the lowest form, low. This is the close. This is a bearish candle, close. And this is the opening price. Okay. What that simply means is this candle opened right here. It got to this high. Then the bearish force came. They pushed it down, pushed it to this extent. Okay. Then the bullish came. They pushed it up. Then the candle closed at this point. That's what this whole story of this candle is all about. So the same thing, how you read this one, that's how you're going to read all of this one. They have got meanings. They've got stories to tell you. So with this one, who would you say is dominating the market? Definitely the bears are dominating. The sellers are dominating. Okay? Because when the market opened, bulls were at the first place, they were in control because they pushed it up. What happened? More of bears, they came into the market, they pushed it down, having this whole body to themselves is all bearish. Then they even push it to this extent. Then the bulls, they came, they pushed it, they managed to push it just small, a little bit up, then before it closed. So the winner of this fight is still the bears, as far as we are concerned in this our illustration. Okay. So let me paint another scenario. Another scenario right here. Let me clear my drawings. Here is another one. Here is a wick. And the bottom, no wick at all. No wick at all. Okay. So let's explain this. Let me explain this. It simply means this is the highest where it at the point this candle got to this point. Hence, it is called high. High. Okay. Then this is the close. It closed at this point. Close. It's open at this point. The opening and the low is the same price. This is the low you ever got to, and this is where it opened. That is, the buyers opened the market. Immediately they opened, they started driving it up immediately. The seller didn't even have power to even push it down at all. There was no hesitation. So the buyers are fully in control. They won the fight and they proved that they'll be able to move this market to the upside in the long run. All right. So that's what this information, this candlestick is telling you. And however, there are still some other candlesticks that you will see, you'll find like this. No color, is colorless. So let me use black. You'll find it like this. What it simply tell you is it was once bullish. It went up at a time. It was once bullish, but sellers came, they pushed it down. So this was the highest it ever got to. High. This one is the low. Is the opening. Is the low, is the opening, and it's same thing as the close. The close are the same place. All right. In this kind of candle, we call it dodgy. Write this down, dodgy. So I sent you. There's one application I asked you to download. Can you see this analysis I did earlier? I said you should sell upon the break of this candle. Can you see it's dropping real hard now, and we're in profit? If you sold at that point, I told you to sell. You should be in massive profit right now. Yes, I'm in good profit. Yeah, I'm in good profit. So that's that. Trading is super easy once you know what the candles are telling you and you are following them strictly. It's still gonna drop. All right. So once you see any candle like that does not have a real body, dodges, they don't have real bodies. No real bodies. The opening price is the same thing. Is the same as the low price. Is the same thing as the closing price. That's a dodgy. Okay, that's what dodgy is. So we have dragonfly dodgy, we have gravestone dodgy. Depends on where you find them and the formation, but just all of them, they are all dodgy. Okay, I'm going to be showing you all of this one on your application. Now, let me take you to application, that your JCP application I want you to study. Okay, first, before we go there, let me explain all types of candlesticks that we have, the formation and what they mean. That gray stone doji, it depends on where you see it. Sorry, that dragonfly doji. Dragonfly doji is the inverted, is the opposite of that one I just showed you. It's like in form of T. It's like this, and we've got like this. Okay, this is where it's open, the opening price, the high, and the close. They are all in the same place. Okay, why? This is the low. This was the low. This is the high. This is the opening price, and this is the closing price. So no real body at all. That simply means sellers were once in control, but buyers came, they pushed it up, and it closed at the same price at which it opened. So that's a doji. So what's this thing telling you? The psychology behind it is the market opens, then the bears drag the price down, then the bullish, there they push it up, then the bulls fight strongly, and eventually they manage to push the price back up to the opening level at this point. Then the longer the lower shadow, this one shadow, or we call it wick, the more effective the bullish signal. So this one is actually telling that buyers are in control. Since the bears, they open the price and they push it down, then the buyers are the last people, they came into the market, they push it up, then there's an instinct that is sent to trader that there's still a strong bearish price, strong bullish presence. That since the buyers, they push it up, then the bullish are still in the market. They are conquering the bears. So most likely what will happen next is for a blue candle to come up, that is a bullish candle. Upon the close, a bullish candle will come up here. So that's signaling, telling that buyers are now in control. So upon that, you should enter for a buy at this point. When you buy at this point, put your stop loss at the low of this doji. That's how to trade this candlestick. Buy, put your stop loss at the low, and target 1 to 2 reward of your profit, of your reward, risk to reward. What I mean by 1 to 2, if you are risking $1 between this place and this place, target 2. Okay, that's how this doji, dragonfly doji, is being traded. And that one you see again is hammer. There's what we call hammer in forex market. The candlestick formation we call hammer. Hammer is always like this. It's always square at the top. Then you have a very long wick. You have this long wick. You see, it's in form of a hammer. So hence the reason why it's being called hammer. Just like a square lollipop. The closing price is above right here. This is the closing price. Wait, let me bring it all out. All right, so here, price, it's open right here. This is your opening price. Then candle, the sellers, rather, I'm supposed to make this, it can be any color actually. It can be buyers, this thing can be buyers, it can be bullish candle, it can be bearish candle. So it's any color. But for this one, let's use a bullish candle. The buyers came to the sellers came, let's make this one is a bearish candle rather. Let me change the color to red. Bearish candle. The sellers came to the market, they opened the price right here. They push it once to this point. Then the buyers came, they push it right up, and it closed here. So hence, this is a closing price. This is the low, and this is the high. The high is the same thing as the opening price. I'm sure you're understanding all of these things. So everything is well explained on JCP application. Just go get it. JCP, that is Japanese Candlesticks Pattern app from Google Play Store. I shared the link to you. So go get the application. There's also what we call bullish engulfing. Bullish engulfing. Bullish engulfing is like this. We have a bearish candle like this, and we have a bullish candle. Bullish candle, we engulf it like from, let's say, from here. So this is bigger than this one. Now let me give them little wicks. I'm sure you already understand what each week I gave to you. I am giving to you. That is, there was a time the price once got here and it was finally pushed up like that. Let me give this one a smaller wick like this. So what this simply means is the red candle implies the control of the bears, that is the sellers in the market. The next candle that comes up, then the sellers lose control, they lose their momentum, then the bulls take charge and they lead the price straight up to this point. They lead the price straight up from it's open right here, then immediately they took it straight up. Then the bulls now have full overreading. They're fully overreading the bears in the forex market. Now they are not in control. So how do you trade this one? You wait for another bullish confirmation. You wait for another bullish candle to close. Upon the close of another bullish candle, then you enter into the market. Once you enter into the market, you use the low, their lows as your stop loss. Then you target 1 to 2. That is, if you are risking 2 here, target 4. If you are risking 1, target 2. If you are risking 4, target 8. Like that. That's what I mean by 1 to 2. So with that said, that's basically that's how you trade all the candlestick pattern. Now let me give you an example of what I've been saying. Now I spotted that example of a dragonfly doji on the chart. Now here's a very good example. Can you see this dragonfly doji at this point here? Here, the one right there. Let me zoom in. Can you see it? Yeah. This one here. You can see this doji. You can see it has a very. You have to focus. This one we're talking about. Here's the one we're talking about. So let me remove this line. Here's the one we're talking about. Let me remove this line so you see it. You can see this, but this is like more of like hammer, but we can still consider it as a doji. You can see the body, that is, sellers once pushed this price right to this place. Then buyers came, they pushed it up and it closed with small body. So remember the strategy we said you can use in trading it. Strategy is you enter, you wait for another bullish confirmation. Here's another bullish confirmation. Here's another bullish candle. This is a confirmation that yes, buyers are not in control. All what you need to, upon the close of this candle, you buy here. You enter buy and use this as your stop loss. So what is your reward? What will be your reward? Your reward is determined on what you are risking. From this close, calculate the low. You are risking 9 pips. So 9 times 2. All right, 9 times 2, that will give you 18. So you target 18 pips. So at this point, you should be out. At this point, this candle will take you out. This one will take you out in profit. Then you secure the profit. And it will give you more and more. But just don't be greedy. Target, just stick to what you are into the market for. All right. So there are a whole lot of them that I can still keep showing you just on our own. All these candles, they all have names and they have ways you can apply them to the forex market. They have names and how you can apply them. Like this one, this is our morning star. I'm not touching morning star. You still see morning star. This is a morning star. 3 candle pattern, 1, 2, 3. When you have this bullish one, this is evening. Since it's fine at the top, it's a sign for bearish. It's called evening star. Morning star is the opposite of evening star. Evening star is fine at the top, signaling a bearish. If you find this thing if you find this pattern at the bottom, let me explain something real quick. They have opposites, like dragonfly doji is for buy signal, while gravestone doji is for sell signal. Morning star is for buy signal. Morning star is opposite of this one. So evening star is for sell signal. Evening star, you have a bullish candle, bearish candle, and a bearish candle telling you to sell. You can see what happened. It sold massively. But why a morning star, we have a bearish candle. Yeah, we have a bullish candle. Remember, we have a bearish candle. Then we now have a bullish candle. We now have another bullish candle telling you to what to buy. So these are the two different things. They are like words. And we have bullish engulfing, we have bearish engulfing, we have hammer, we have shooting star. Opposite of hammer is shooting star. We have piercing, just like they are just two opposite. They all are stated in that application right there. Now let me screenshot it and send to Telegram. Then I can show you. I can show you. Okay, I can't screenshot it. All right, I will not be able to screenshot it because of the policy of the application. Does not allow screenshots. All right, so just download the application. You better understand all what I'm saying. Let me show you one more example of another candle that we're talking about. Whenever you see those candles, they are showing you, they are signs of reversal. Like these candles are telling you strong information about what is likely to happen in the market next. What will likely happen in the forex market. That's what these candles are. Okay, there's what, look at piercing right here. These piercing candles. Once you read this candlestick formation, you just look on your chart and try to measure what candlestick is this one and what happened afterwards. Sellers once push the price down to this place, then the buyers came, they push it to this point. What happened? Followed by a bullish confirmation, then boom, to the upside. This candle is what we call hammer. You can see the small body right here is longer. Remember, the longer the wick, the better the signal. This is what we call hammer. So that's that about that. I can still show you on that's on Euro USD. On GBP USD, let me show you one more. Let me show you. There are a whole lot of, this is a piercing right here, bullish. Another one pierces it most, like more than 50% of this bullish candle. Here is a morning star right here. Morning star, or if you sign on the top, sorry, evening star, bullish, bearish, and bullish right here. What happened? Boom, it dropped 50 pips. See, there are a lot of them. You can see evening star here, another evening star right here. These three candles, evening star. They all have meaning. You can see this one, sort of like double bottom. They have the same double bottom. When you read these things, you understand. When you read them on. All right, so you can see another one again. This is our evening star, bullish candle. This no true body. Then another bearish. What happened? It dropped 100 pips. 100 pips.